Bank failures are typically not that common, but lately I think we're starting to see a trend. I know many of us are starting to wonder what we can do, if anything at all, to protect ourselves, to protect our deposits from yet another bank collapse. First, it was Silicon Valley Bank and Signature Bank, followed by Credit Suisse, and now First Republic Bank. Even though bank failures are not too common, there are several steps that you can still take to reduce risk and to protect your money, to protect your future. The very first thing that you're going to want to do is a simple step. Make sure that your bank is FDIC insured. If you bank with a credit union, make sure that your deposits are NCUA insured. NCUA stands for National Credit Union Association. You can simply search for your bank or your credit union on the FDIC or NCUA websites. If you're not too sure how to do it, I will leave a link for you below, and you can follow that link and search for your financial institution. Make sure that they are insured. If you're banking with a regional bank or a mid-sized bank, you really need to start keeping up with financial news, especially related to the area where you live and your bank or your credit union. What is a mid-sized bank? Very often we hear that mid-sized banks are at a greater risk, and it is true. Generally, its total assets would be in excess of $15 million and all the way up to $115 billion. A bank with assets of $600 million or less is a small bank. So these are the two categories that are at a greater risk of being consolidated, of course, after they are deemed to be either insolvent or illiquid. With that being said, you're going to need to start staying up to date with financial news. The sooner you're made aware of any even potential issues, the sooner you will be able to decide what you need to do to protect yourselves. Federal Deposit Insurance Corporation, FDIC, is a government agency, and so is NCUA. There's an entire video here on my channel where I explain how to structure your deposits so that you can make the most of the FDIC insurance limits. I will link that video below. The FDIC covers up to $250,000 per depositor per account, so consider setting up additional accounts if you plan to hold more than $250,000 individually or $500,000 with a joint account holder. Typically, your deposits are insured even if they are in different types of accounts at the same bank. Hopefully this quick video makes navigating through the current events a bit easier. If so, show your support, give this video a like, and consider sharing it. Thank you for watching. Subscribe to my channel if you haven't already. I would love to have you back for my next one. And if you enjoy reading, consider checking out my newsletter on Substack for additional content that's not available here on YouTube or on Rumble. I will see you tomorrow in my next one. Take care.